Welcome to the third quarter of 2018 results of Emirates REIT. The key highlights will be presented by Sylvain Vieuxot, the Group Chairman of Equitativa. Over to you, Sylvain.
Thank you, Rasha. Well, we had a fairly good growth in this quarter, considering otherwise a fairly tough environment. Our property income grew by 19%, and our property operating income grew by 22%. During the quarter, we focused on optimizing the expenses of the portfolio. Thanks to the growth of the group, we have a higher buying power, and therefore we renegotiated contracts with several suppliers. The expenses of the portfolio have decreased from 24% of our rental income to 22% of our rental income. As a result, our margins have increased from 76% to 78%. The combined effect of the increased rent and the reduced cost led to a significant improvement in our EBITDA. Our EBITDA grew by 28% and is now set at $27 million for the first 9 months of the year. A year ago, we delivered our third school, the British Columbia Canadian School in Dubai Investment Park. This was a new school with a new operator, and unfortunately, in this market, the operator was unable to continue operations. Since that, we received significant number of offers from other operators to take over the school, and we have now selected a new operator that will start operating for the next academic year. This was an important test for us. When we build a new school, we always pay a lot of attention to the location, the layout, the construction of the school, and the fact that in less than a quarter we received several offers from really serious operators, and that we could select one, proves that this is a very attractive investment and fairly resilient investment.
Let's talk a little bit more about the financial highlights with our Group CFO of Equitativa, Rami Ishak.
Thank you. For the 9-month period ended on September 30th, 2018, property income has grown by 19%, or $8 million, to reach a level of $52 million over the same period in 2017. Of this growth, 65% is attributed to new acquisitions, which were the European Business Center and Lycée Français John Mermoz. 25% of that growth is attributed directly to the lease-up at Index Tower, and the remaining 10% is the organic growth across the remaining assets in the portfolio. The improvement in operating margins to 78% have further enhanced the growth in property operating income to 22% to reach a level of $41 million for the 9-month period of 2018. This has translated into a 28% growth in EBITDA to reach $27 million, further contributing to the record levels achieved in the first half of 2018. Q3 EBITDA was $9.3 million, which is in line with the quarterly record high achieved in Q2 of also $9.3 million. In what has traditionally been the softest quarter of the year, the resilience of our portfolio has enabled the stability in the funds from operations. This has reduced the variance in the year-on-year FFO to 3% for the 9 months ending in 2018 September. In Q1, the variance was 16%, and for the first half of 18, it was 7%. So that stability has proved beneficial to closing that gap and almost eliminating it and hopefully enhancing it moving forward. Q3 FFO stands at $4.2 million, in line with Q2 FFO, which was also at $4.2 million. For the 9-month period ended September 30th, 2018, FFO stands at $12 million. This has cemented the full absorption of the 70% increase in finance costs. So with respect to investment property, BCCS defaulted in August, and that has resulted in a valuation loss. And we have been able to secure a new operator for the commencement of the new academic year. This will support the recovery of this asset's valuation. Portfolio value now stands at $915 million, an 8% increase, and makes up the significant majority of total assets at $963 million. The Sukuk facility stands at $398 million, which also makes up the significant majority of total liabilities at $436 million. The LTV ratio stands at 41.3%, and the NAV stands at $529 million, or 1.76 per share.
As of 30th of September 2018, the total portfolio value for Emirates REIT is $915 million. The net asset value is $529 million, which represents a net asset value per share of $1.76. The net leasable area of the total portfolio is over 218,000 square meters, with a strong occupancy of 74%. The weighted average lease term is 8 years, with 11 properties and approximately 351 tenants.
The market is quite favorable for acquisitions at the moment, and we are in the process of negotiating a few very interesting acquisitions that we hope to close shortly. We also called for a shareholder meeting to be able to take additional leverage to take advantage of this market. Thank you for following Emirates REIT. We look forward to meet you in person at our shareholder meeting on the 26th of November and also at the various investor conferences.